Hi everybody, this is TJ with Netpicks and the Spotlight Power Trader. Wanted to show you some of the trades from today. It was a pretty eventful day, lots of movement in the markets. It got pretty choppy midway through, but also had great trades throughout, and it was our trade plans that kept us on track. If you have your trade plan intact, you just have to learn how to lean on it and rely on it and let it just take your equity up and up and up. It won't be a straight line, of course, but all our major markets that we like to trade, hitting power of quitting goals. Let's start with the Russell. The Russell starts at 8:30 Central, as you know, using an 8-tick momentum bar or an 8-range and Ninja. Here's the first trade right here. Now, it does trigger in. Normally, if I see a little spike, especially if I see these moving averages pushing lower, but with the Russell, I do like to get a little extra price action confirmation. So I'm looking to get long, a few ticks higher. This is just a technique I use. You don't have to. I call it an insurance premium. It would have cost 3 ticks in this case because you'll see that it wouldn't have mattered because it came up. It would have triggered in anyway. So, you know, some of you like to do this, some of you don't like to do this. Either way, I think your results will be good. You can see how it came up and hit target 2. That was the goal. So if you did not adjust, it's worth 19 ticks. If you made the adjustment, it's worth 16 ticks. Target 3, of course, if you have a second position, you could either trail or go to target 3. You can see the trailer is holding. There's an entry to go short, but it's right on that spike, so I would move that down. I'm not going to go short anyway. I would ignore it in this case. So really, you don't get stopped out, and it goes higher. And so then when it closes above the balance line, you can move your stop 2 ticks below it. And of course, you can see that the balance line is at 90, so you put your stop at 0.7, and it's going to stop out at 0.7. But a nice trade. And one and done. I mean, this trade got in at 8:38 Central, and it hit its target 3 literally 3 minutes later. Not a bad day's work. You don't need to keep trading. You need to trade less. And as your account grows, increase your position size accordingly based on our guidelines. The Dow eMini, the YM, also hit its goals today. You had to wait a little while for the first trade. This one came too early. Then you had a filtered out trade. The filtered trade would have won. Sometimes filters will eliminate good trades, both up and down, mainly because when the crossover filter kicks in, it's to protect you from an extended trend. But you had this wavy, trendless formation going on in here, and that's when the filter will not be as effective. As you could see, it would have been 2 winning trades. But you just stay focused and stay with your trade plan, wait for the first setup, and it comes here, and it's, 8:53, so about 23 minutes into the session. You get long, and it comes up, and it misses its full target too by 1 tick, and that qualifies for our power of quitting. We want to trade for profit. You don't want to fight over 1 tick. It's pretty accurate when you can just miss by 1 tick, or usually I just think of it as either 1 tick or 95% of the way to that first target objective of target 2, and then I'm aggressively going to get out of that position. I could either wait for it to come back to target 1, or I can put a stop below the next key level, maybe at 24299, for example. The point is you take a partial profit and you consider it a successful session, one and done. You still could leave your second position on to trail if you'd like. In this case, it stops out. But basically, a one and done session for the YM as well. And the YM is literally sitting a few points below its all-time equity highs, literally 1 winning trade away from breaking out to new record profit levels since I've been tracking this chart. Just going through the eMinis here, the NQ also one and done today. First trade of the day, right at 8:33. Really nice trade, just falling through all its targets and then stopping out right here. You just don't need to do more than this, you guys. That 10 points right there in 1 contract only, it's $200. 2 contracts, $400, literally pays your Inner Circle membership for the month. Just 1 trade. And by the way, it took 1 minute. Literally getting it at 8:33, hitting that target 2 at 8:34. That's the way Spotlight Power Trader is supposed to be used. Tested trade plan, stick to the rules, hit your goals, you're done. Move your account along little by little, becomes a lot by a lot over time as you continue to grow your equity and grow your position size. Because you can imagine what this would be with 10 contracts. Wouldn't be $200 anymore, would be $2,000 in 1 minute. That's what you want to do. You want to get your account up to where you can put a 10 contract trade on and still have it represent only 2% of your capital. That's the secret to success. If you keep trading, you run into trouble. You give back your winnings. There's a random distribution of wins and losses. Even if you're winning 90% of the time, your 10% losses will stack up and take away your money. It's just how it works. So we have to mitigate by using the odds and quitting positive most of the time while controlling our drawdown with minimal and efficient trading. That's the goal of the strategy, and that's the way you need to use the strategy. And if you do, your odds of success could never be higher. Now I've got a trick question for you coming up with crude oil today. Crude oil, literally 2 trades and a winner, and a lot of you are going to scratch your head and go, huh, how did that happen? And I'll show you, but I want you to think it through. But before I do that, let's just look at the ES, the other eMini. This works really well with Spotlight. I like a 1.5 point momentum bar or a 6 range bar on Ninja. The 987 tick chart works nice too. I think I like the momentum bar even more. Let's just take a look, starting right at 830. Here we are at 831. Don't second guess. If you've tested your plan and you like the results over time and you're able to quit positive most of the time with minimal trading, don't just think, gee, this trade might not win. Yeah, it might not win. Any trade might not win. But the odds are it's going to win. So it's a matter of putting on the smallest size position that you need to stick to that 2% ratio of your capital. And then that way you can always take the next trade and remain standing so that the odds have enough time to work in your favor, and then you can quit with that positive result. Everyone seems to forget that. So it gets short right here, 27.43 1/4. Could you adjust it 1 tick below the spike right here? You certainly can. And, you know, it might be prudent to do that. I just hate doing it with the ES because it's $12.50 a tick. There's only 4 ticks to a point, so every tick is a higher percentage of the overall trade. And so the insurance you're paying for the extra confirmation, it costs more on a per trade basis. But that doesn't mean you shouldn't do it. That's one of the things you just have to decide. It's a style decision. So the ES is always challenging because it's expensive. But it works well with Spotlight. And it does take a little heat, but then it just crashes down. Target 1, if you're trading multiple positions, you can certainly take profit at target 1. That's 10 ticks, 2.5 points, $50 a point. It's $112.50 per contract. Target 2, 16. So that's literally a $200 position right there. So if you took profit here and here, that's over $312. Target 3, target 4 goes through by 1 tick. That means you get filled for sure. I mean, that's pretty good, right? That's 5.5 points to target 3. There you go, 7 points to target 4. And that one trade, once again, depending on how many positions you're trading, covers your nut for the IC or pays off Spotlight Power Trader. This is how you want to do it. Winning trade plan, get that winning trade. Even if you take that out and pay the product on that first trade, you know you're covered, you can manage it. You have to think like a business person when you're trading. Spotlight, the Inner Circle, they're investments. The investment pays for itself, but you've got to be a good business manager also. Trading is a business. It's not a hobby. We don't do it for fun. We do it to make a living. Now, a lot of you might be wondering why I've got all these lines on the chart. Obviously, the 50 EMA and the 200 EMA, I think, are very important because that's how we determine our filters. And the yellow trade, of course, is based off that 50 EMA, right? When our exhaustion dots line up on it and it acts as support, it gives us a nice trade to the upside in this case. All right, the blue line is a 20 simple moving average, and I really like it because I can use it to trade off of when the market's trending. All right, so we don't need it. I mean, I could take it off. We don't need it for this example. I like it personally, but it's not necessary. As you learn the spotlight, you'll learn new techniques. I talk about new techniques in the trade room. So let's forget that for a moment. Let me ask you this. I want you to think, if you're trading crude oil, hopefully you know the trade plan. It just never ceases to amaze me how many people jump in trying to trade the Spotlight Power Trader without going through the training. They see trades, it looks really nice, they start taking trades, and then they wonder why they're not making any money, or why the trade they took is a losing trade, or whatever. Remember, there's always a random distribution of wins and losses, and if you're not trading a proven trade plan, you're probably not going to win, even with a great strategy, because you're ill-prepared. And a great strategy is still dangerous in the hands of an ill-prepared trader. You got a great strategy, you got a great tools, but you need to know how to use it. You have to go through the training. So let's walk through this for a second. Those of you who have been in the trade room and understand how we use a spotlight should know that all of this in here, let me just go a little further so you can really see what happened. All of this in here looks like a lot of trades up and down, maybe a long that didn't work and a short that didn't work, and right? Well, there were only 2 trades in here and they were both winners if you're following the trade plan. So let's walk through it. It starts at 9 o'clock. So here it is at 9:06. Obviously, it's a simple trade. It's very cut and dry. You got your entry, no adjustments to be made. Comes up, hits money management. The stop moves up, comes down and stops out. Now, there's a case to be made to take profit at target 1, especially if it's 10 ticks or more. And if you do, great. You would have made 11 ticks. All right, but target 2 is our power of quitting objective. Target 2 is what we're going for. So this is considered a break-even or a partial profit trade, a money management trade, if you will. We still need one more, right? Because you need 2 of those and not be negative, or a target 2 winner and not be negative, be positive. Those are the 2 things we need to quit within X amount of trades. All right, I usually figure 5 or 6 trades. We want to get it done within 1 or 2 if we can. Not always the case, but today it was. Look what happens. There's a second trade right here. Now that you've kind of seen what's going to happen already, let's walk through this and think it through. Here's the second trade. You're trying to get to your goals. You get long, 68.51. Nice size trade. 19 tick risk. These are the kind of trades that are good. It means that crude oil's got some range. That's what we want to make money with crude oil. So it does trigger in finally. Look at all the setup bars before it finally triggers in. Well, if you know the rules, you have to have a couple closes below the balance line to cancel the setup. Well, they all close above it. This is what you need to let the trade develop sometimes. It's building pressure, and then it pops on through, making new swing highs. It looks like it's going to go, right? Well, it tricked you. Now it's going down the other way. And a lot of times a false breakout in one direction often leads to a really strong move in the opposite direction. So maybe you're taking some heat on that yellow trade, but if you're like me, you're thinking, man, that short trade can really go. That it failed to make a new high, no follow through, maybe taking out some stops, picking off the last buyers, the sellers taking over, right? But here's our philosophy. If we're in a trade, we want to protect the trade we're in while also respecting the fact that the market could be turning. We don't know. No one knows. But we are in a long trade. That much we know. So what I like to do is put a 2-tick adjustment on the entry, and then if I'm up against a key level, which is a nickel, a 0.05, multiple of a 0.05 in crude oil, I would want to push that down to a 0.04. All right, so look at the short. The short is at 68.38. I want to make the 2-tick adjustment, so that pushes my entry down to 68.36, right? 68.36, it's right about there. Well, 6 is 1 tick in front of my nickel. So I don't get short at 6. I work around the nickel and I get short at the 04. So instead of getting short at 68.36, I want to get short at 68.34, which is right there. I know it's on the 50 moving average, but I can't just adjust. That's a big enough adjustment. Okay, you adjust yourself all the way down to 0 because I could look at this over here, I could look at this over here, I could look at... No, you just make the small adjustments. And the rule is protect the trade you're in, but respect the fact that the market could be turning. Worst case scenario, 2 losses. That could happen. But look what happens here. The price stabs down and it looks like, oh goodness, it got short. So that's a losing trade. But if you look a little closer and if you had your short at 34, this low of this bar right on the moving average is 68.35. You see how the key level held its position? This is why we do this. You might say, oh, you're just making this up as you go. No, I'm not. These are things we do each and every time. This is our way of doing it. I don't need the calculator, try to program every little thing into the calculator. That's not practical. What's practical is that you learn the techniques and you learn to recognize it, and then you practice with repetition. You see it enough times. I don't even think about it. I already know I'm not getting short at 36. I'm getting short at 34. And it saves the trade because it wasn't a false breakout. It was just a noisy market. It wasn't ready to go down, but it was taking out a bunch of tight stops, wasn't it? Because look what happens. It zooms up ultimately. Remember, we were in this trade back here. This trade. This is the second trade. We're in this trade, right? So it hits target 1, and the stop is going to move up to lock in the 1 tick, right? This stop thinks it's in this trade here, but we're not. We're in this trade. You have to remember that. But it doesn't matter because it goes up and it hits target 2, and it's a full winner. And you know what? If you're trying to trade the spotlight without learning our techniques, learning the rules, there's not a lot of techniques. There's a few things that happen over and over and over again. And we've learned how to mitigate some of that. Stop and reversals. We all don't like stop and reversals because it means we have to admit that a trade's going to lose. But the market's going to do what it wants to do, and sometimes the stop and reversals will cut our loss and put us on the winning side of the trade. But we want to ask for extra confirmation, and by getting short or putting our stop and reverse at 34, we're working around possible support levels, not only on the swing level here, which was at 34, by the way. Some people might even go to 33 because of that. Wouldn't bother me. I do think that's kind of a large adjustment. For me, it's just the 2 ticks, and then if I'm up against a key level, work around the key level. That's basically how I do it, unless it's like a real obvious, huge area of support or resistance you want to get around. But the more you over adjust, the more you wreck your trade. The point is, this trade stayed long. It was a small adjustment. It was based on our rules that we do the same way each and every time. That way we can get measurable results. We can put it in our backtest results. And this is a beautiful session, even though it looks really noisy in here. So that's why it's important to learn the strategy, go through the training, practice. This is so worth it. How many times do I keep showing you how the spotlight keeps getting its goals in like the first trade or second trade or in just a few trades? Then when you do have a losing session, no problem. It's a losing session. You're going to recover. You're going to recover. The winners will come. Just a couple more examples here. Unleaded gas. This is such a great chart. If you learn how to trade it, and this is where you can use the blue line, and you can literally, if the 3 dots line up on that blue line within a few ticks, just like our rules with the yellow trade, you can take a trade and you can learn how to draw it. This is right a minute before the start, and then it triggers in, or you can do it even here. These would be add-on trades, of course, because the calculator is tracking a trade from way back here. And they're advanced techniques, so you don't necessarily have to do this. You could just wait for the next setup, but like you could learn how to draw the trade right on the chart. I do this all the time in the trade room. I show you how. These are all trades you can draw on there. They're spotlight trades. They're exactly the right formula, everything. Or not. You don't have to do that. I'm just saying, that's why I have the blue line. You could just wait for the first trade of the generic trade plan. It works great. Look what happens. You got to wait a little bit, but it finally comes, and it's a loser. But it's the first trade, and it's not incorrect. It's a correct trade. It just happens to lose, and it loses 43 ticks. But what I want to show you is that whenever there's a trending market, reversals will not work. They just won't until a certain one. Usually by the 4th one, the odds go way up. So look at this. That would have been your first reversal. It's a reversal setup that's filtered out. That's the second reversal setup filtered out. The third one happens. It's a It's a valid setup for the trade plan. Whether you take it or not depends on if you're going to, count how many reversals there are. Maybe the odds aren't quite as good on this one, but then the fourth one happens right here, and that one is a second trade in the trade plan, and it works like a charm. And this loss of 43 ticks gives way to a winner to target 2 of 61 ticks, even a single position, and that's power of quitting already in multiple positions. Obviously, you can see how well you would have done, but it's the fourth reversal in the trend. Now, it doesn't mean the fourth reversal is always going to win. It's not always going to win, but the odds go up, and surely you can see how nice that worked. And plus, you can kind of look at how it failed to make, it kind of broke through and made a new low here. You had really strong waves down, and then you had a wave down that was weak. And then it started to turn, and it corresponded with our exhaustion dots, the closing above the balance line, and the fourth attempted reversal. And a lot of room to try to come back up and get to that 50 moving average. Lots of things going on to make you want to take that trade right there. And these are things you can learn. These are things you can learn by seeing it over and over, hearing about it over and over, repetition. These things repeat themselves over and over and over again. All right, so that's a lot of examples. I was going to show you the euro yen. It won on the US, the euro, and the Asian sessions, but it's dots on the chart. It's buyers, sellers. It looks basically the same as this. And now this video has gotten too long, so we'll just save that for another time, or you could ask me about it tomorrow in the trade room. Hope you enjoyed this video, everybody. This is TJ with Netpicks and the Spotlight Power Trader. Learn the strategy, use it the way it's intended to be used, and I think you're going to be very happy that you took that advice.